Hello, everybody, and welcome to the Dollar Auction Show with Alex and Shimon. Today, we have a very exciting episode for everybody. We'll cover a bunch of news and some developments in the crypto industry, and then we have a fantastic interview. But in the meantime, Alex, what is happening in the crypto space that's interesting to you? I have a couple of really interesting things that I wanted to talk about, but what's new in your eyes?
Well, in my eyes, in my beautiful eyes, well, the most important thing that I want to talk about is Celsius. But maybe we should talk about price action first. Should we do a quick overview of price? It's been kind of flat. Bitcoin now is 23.5. You always do the price action. Let me do it really quickly. It's down week over week about 5%, but look, in the grand scheme of things, it's not that much. The one thing is, there's a lot of, call it short-term bearish divergence, which means that as price moves up, which it has from 20 to 25,000, the RSI, which is essentially the strength of the move, is moving down, right? So as the price moves up, makes higher highs, the RSI is making lower highs, which basically means this is on the daily, which is probably we're looking at next month and a half, maybe 2 months of some sort of retest of, the levels, call it 20. And then we'll see what happens. But so far, the market has been pretty steady. And even looking at, the PCE inflator came in pretty high. So inflation is ramping back up, at least in the United States. And Bitcoin's been holding, pretty steady. Those are that. And I do want to talk about Celsius, but I want to hear about your interesting facts. What are you seeing?
So in terms of the price, I think one of the biggest interesting things that happened this year, which is also in line with what happened last year, is a Bitcoin and NASDAQ kind of decoupled, not in the direction, but in the magnitude. So from the beginning of the year, I have the chart here, Bitcoin is up 41% and NASDAQ is only up by 11%. And I think this is important because last year both went down. So there was a lot of narrative of like, oh, Bitcoin is correlated, but like now I think we're solidifying the narrative that Bitcoin is kind of the fastest horse in the race. To quote, who was that said it? Druckenmiller. Stan Druckenmiller basically said, look, this is like a commodity that performs better than the stock market. Now, what's really interesting, I wanted to mention one thing about commodities because like there's this whole SEC discussion of like, what is a commodity? What is a security? But like beyond that conversation, commodities usually have this feature of when the price of a commodity goes up, the producers produce more of it, and then eventually the price crashes down. We don't know when, but like eventually. And you can see this with natural gas, actually. It's super interesting. So natural gas, if you guys remember when the war with Ukraine broke, it was like crazy. Broke out, yes, a year ago. So I'm looking at the price of natural gas. I actually want to share this chart with our audience here because I think this is one of the main drivers of Bitcoin in this coming cycle. So this is the price of natural gas. So you can see that during 2021, it was pretty much at around $2.70. It was lower before that, during the Trump years. You can see that it was much, much lower. And, Trump deregulated a bunch of this stuff. So there was a bunch of lows here at around 1.6. But overall, you guys can see that the price was around $2.50 to $3. Then what happened is the war broke out here in 2022. And there was a huge surge in price. So like natural gas went to like $9. This is a crazy move, and people are saying, oh, in Europe people are not going to be able to heat their homes and so forth. But then look at what happened now. We're down so much that we're back to our normal range. Currently the price of natural gas is $2.64. Now, why is this important? Bitcoin is both a commodity, but it's also the only commodity where if the demand increases and the price increases, instead of the supply increasing, the difficulty adjustment increases. And that's one of the main innovations of Bitcoin that Saifedean Ammous basically said in his book, The Bitcoin Standard, that this is the big aha moment he had about Bitcoin, that it's a new synthetic commodity. It's the only commodity where price increases don't increase the output. but rather increase the security of the network. And that creates like this self-reinforcing cycle. So I think this is a very important thing to watch in this coming cycle, especially since when the Fed increases interest rates or keeps them high or doesn't pivot very aggressively, people are kind of bearish on stocks. They basically say, look, stocks will maybe meander in this range, and it might take some time for them to hit an all-time high. My prediction is that Bitcoin will hit an all-time high before the NASDAQ hits an all-time high. And you can timestamp that, February 28th, 2023, Shimon's prediction.
I love your prediction. To take a little bit of wind out of your sails, it's not that crazy of a prediction. One, because look, as adoption ramps up, and it's very early stages of adoption, the price should go up. And like you said, this is a very important point that you made, that this is the only commodity where there's no more supply. It actually increases the network, the viability of the network, security of the network. The other thing is it's a risk asset right now. At least Wall Street's treating it like a risk asset, and typically those recover first. Like look at the NASDAQ; it's recovered more, at least from the bottoms, right? If we look at just the bottom, than the S&P. Money is going to start flowing back into those risk assets, and especially once we get interest rate cuts. Is there anything else you want to bring up before I touch upon Celsius? Because Celsius
touch upon Celsius, and then I'll touch upon ordinals, which is our favorite topic.
Ooh, yes. I love ordinals. So Celsius is going through, just bring everyone back up to speed. Celsius was this unbanked bank. Now it turns out massive fraud there. People, me included, had money in Celsius, and now they're going bankrupt. So I think there's a couple things to note. One, when these things go bankrupt, all the creditors' information is published. Mine was published. I've actually 2 or 3 days ago started getting incredible amount of spam on my text messages. Hey, your KuCoin account, someone's trying to log in. I don't have a KuCoin account. Click on this link. Or hey, your Trezor wallet has an issue. I don't have a Trezor wallet. Click on this link. So the point is that they're finding common. They found my name. They somehow linked it to my phone number, which is not that hard to get because there's a dark web and you can get this fairly easily. Be very, very careful of phishing scams, and it also shows how in crypto a lot of people get doxxed. So, as a side note, also two-factor authentication for everyone. Please, please, please be safer, especially in crypto, and don't use your phone as a two-factor authentication. Use don't use SMS. Use like Authenticator or Microsoft's any kind of secure key that's an app that's on your phone.
And this is a very important point. When I was working at Kraken, which is like an exchange that prides itself of top security, one of the top executives got hacked and lost like 3 Bitcoins. And the way they got hacked is someone goes into a T-Mobile or Verizon store. The minimum wage person there, may not be 100% compliant with their security protocols, and someone can come with a fake ID, start yelling at you, my wife's in the hospital, my phone's not working, I really need like my phone number, and then like just pressure the person, and it's called a SIM swap. So someone else can get a SIM card with your phone number. So like an SMS is actually a very, very insecure way of doing two-factor authentication. You can either use a hardware device like a YubiKey or a Google Authenticator or any other authenticator. So yeah, it's very important.
Very, very important.
You got a crazy phishing, like anyone who's in crypto probably is a target. I got the craziest phishing attempt yesterday, a voicemail. Someone left me a voicemail pretending to be one of the executives of the firm that I work at.
Wow.
And was like, hey, this is so-and-so, put the name of the executive. I have something very urgent that I want to ask you about, and nobody else is answering, so it's really important for you to call me back. And then I verified with that person that he did not send that voicemail. So people are getting very sophisticated in their phishing attacks.
This is so important, guys. Please stay safe out there.
Don't click on links. If you get an email, let's say from Coinbase, that says your account has been compromised, what you do is instead of clicking on the link, you just go to coinbase.com. And believe me, if your account was compromised, when you try to log in, you will see an error message saying, hey, your account is locked, contact customer support. So you want to be the one contacting the service provider instead of answering to either a call or an email or a text message from that service provider.
Yeah, guys, stay safe. Even the biggest pros in the industry can get hacked. Like you said, in Kraken, this is the most secure exchange, or at least that's the ethos. Um, but here's what I want to talk about Celsius. So Celsius is going through a bankruptcy process, and there's this UCC, which is the essentially United Creditors Committee, uh, or Unified Creditors Committee, which represents the creditors of Celsius. Long story short, Celsius is kind of the first one out of the gate. There's been a lot of stops and stops with them, stops with them, and about the company presenting a plan for restructuring. Because there's two types of bankruptcies: Chapter 11, restructure, and Chapter 7, full bankruptcy. You're dissolving and moving on. So what's happening with Celsius is that Voyager, BlockFi, FTX are all kind of waiting in the wings to see the precedent, the basically judicial precedent that Celsius will create. And the biggest thing here is retail clawbacks. And retail clawbacks basically says in U.S. bankruptcy court that if you took your money out for up to 90 days before the bankruptcy, the company can technically come back and claw it back and say, hey, bring the money back onto the platform. Okay? The problem, and this is a huge, major problem, because the law basically was made for older businesses that says, hey, it's not fair that the pie is smaller for the people that remain, so bring back the people for 90 days out and bring them back their money, and then we'll distribute the pie among folks. The problem is that in Celsius's case, people took money out. So Celsius went bankrupt in June, sometime in June. 90 days beforehand would have been April. People took money out before knowing anything's going to happen to pay taxes, right? Retail. And or then later figured out that Celsius was a scam or fraud. They took money out beforehand to basically save themselves. So now that's problem number one. Problem number two is that the volatility is very high. So if they claw back dollar amounts, they can say, hey, you owe us, call it one Bitcoin at $40,000 instead of the $20,000 that it is now. So you actually owe more money back, right, than what you have now. So you have to go out and buy it. There are people who are going to go bankrupt. There are suicide notes out there. Then there are insider clawbacks, which they should claw back. Alex Mashinsky, Daniel Leon, and others who have pulled their money out. And there's craziness about how Mashinsky was going on AMAs and saying everything's fine, knowing that they're liquid and pulling his money out while trying to get investors to come in. I mean, pure fraud. I mean, the amount of bad actors we found out in the space is crazy.
Yeah.
What?
That you go to jail for, lying to investors?
Yeah, exactly. So if the judge approves retail clawbacks, then they can claw back on FTX, on Voyager, on all of the other.
Because they use it as a precedent, basically.
Exactly. And what happens if that's the case? This will forget regulation. This will bring down the industry in a major way, because people will need to go out potentially. You can deposit one Bitcoin back. You're depositing one Bitcoin back on this new reorg company, and you have no trust that it will exist 5 years later. 2, if you have to bring back dollar amounts, you would have to go out potentially and buy things that you didn't have, right? And 3, it will create such mistrust in any centralized player that most of retail will just say, forget it. I don't want to participate in this industry. It's just not worth my heartache.
Well, no, I don't think it's the whole industry. I think what will happen is the Fidelities and the Robin Hoods and the PayPals and Venmos and Coinbases of the world that are very well regulated. Then they will get a larger market share, and the less regulated players, whether they're offshore, whether they're smaller companies, they will go. Yeah, it will be bad. But it sucks with the global. One advice I have for people: I lived through the 2017 crash, 2017-2018 crash. People had a very similar problem there, because let's say you were trading altcoins. Or even Bitcoin, buying, selling, doing some stuff, and then you owe taxes, right, on the profit. And the loss, you can only write off up to $3,000. Not tax advised. Talk to your accountant, but like this is my experience. So what happened is after the price crashed, if people did not put aside every time they closed a profitable position, if they didn't put aside enough money to pay the taxes, after the crash, the tax bill could be more than your entire portfolio. So not only is this like a type of margin call, but like it could even bankrupt you. Like I know of people who owe the IRS like tremendous amounts of money because they were like, let's say you have $2 million of some sort of crypto token. Let's say you buy for 2 million, sell for 2.1 million, then buy for 2.5 million, sell for 2.6 million. All of those taxes you owe, when Bitcoin crashes and your portfolio is worth 200,000 suddenly, right? The taxes you owe are bigger than your whole portfolio. And in your example, if you withdraw money from Celsius, if you withdraw Bitcoin from Celsius, don't sell the Bitcoin. Or no, actually, sell the Bitcoin into fiat. I mean, it's hard because like I could assume that like the clawback would be in Bitcoin terms, not in US dollar terms. But I mean, that's up to the lawyers. I don't know.
Exactly.
So
The point is, it's just a dangerous situation.
you can't even protect yourself, even if you wanted to do the right thing, because you don't know if the judge will say the clawback is in dollars or the clawback is in the asset that you withdrew. You don't know, should I sell the asset to protect myself from a clawback, or should I keep the asset to protect myself from the clawback and not sell? And in both cases, you can get screwed if the judge decides the other way. It's a very problematic situation.
Yeah, and this is, I mean, we'll see how it comes out. Most people think that retail clawbacks won't happen. And again, they'll rule kind of against it because it's hugely unethical. And if you think about, again, mom and pop or just regular retail players, it's, you can get screwed in the bankruptcy and then also lose everything that you have. I mean, it's just, it's hugely unfair. So we'll see. There's like deadlines, March 1st, March 8th, but theoretically, I think the judge will extend the final plan until March 31st for Celsius, and then we'll find out. But this month, if you have money in Celsius, there's Twitter handles you can follow. Simon Dixon is probably the best by far out there. He's been in the space for a while. And he's been fighting on behalf of creditors. He was actually a shareholder in Celsius. He was close to Mashinsky, but he was the first one to call out the fraud, and people didn't believe him. So follow Simon Dixon. I don't know him personally. I found him to be extremely helpful. He puts on a lot of AMAs, and he really breaks down the process. And he's been organizing people to basically go out and kind of push back and put pressure on the UCC, which is the committee, the creditors committee, and as well as Celsius and all these other bids to remove retail clawbacks, to find a plan that's the most equipped to basically get people's money back.
I mean, in general, the good advice for people is whenever someone pays you yield, especially if they guarantee a certain percentage yield, be very, very thorough with your due diligence. And by the way, this is not just advice for crypto. Like I know of a person in Israel who basically bought an investment property, got a mortgage, and then placed a tenant there, right? The tenant covered his mortgage with the rent. And he was like, great, I'll just coast for 30 years. 30 years later, my mortgage will be paid off. Then the tenant stopped paying. It was really hard to evict them because it was like a single mother or something, and there are protections for certain society classes. Guess what? The bank, right? You now owe the mortgage. You can't bring in another tenant until you evict the current tenant. And if you stop paying the mortgage, it's not like they just take over the apartment. They can still sue you personally for the money that you owe them. So again, every time you plan on generating a yield, just do a lot of due diligence. In other news, FTX, speaking of indictments and stuff like that. So really big news broke just a few minutes ago, actually, which is Nishad Singh, who was the director of engineering in FTX, has agreed to plead guilty to U.S. fraud charges. So that's That's huge. Basically, plead guilty to one count of wire fraud, one count of conspiracy to commit wire fraud on FTX customers, and one count of conspiracy to commit commodities fraud. So why is this important? This is important because he was a very, very high up person in the organization. And both Nishad Singh, Caroline Ellison, and Gary Wang have all pled guilty. So that's, and here I'll draw from my experience. My father-in-law was a federal prosecutor prosecuting gangs, and he actually did some really cool stuff with the Russian mafia, way, way back. What you do is you go after the low-level people, you get them to plead guilty, so they give you the higher-up person, and then they plead guilty until you get to the top, because the top person is not going to plead guilty, and the top person probably has a lot of resources for lawyers and can drag out the thing, but if everybody under him pleads guilty, it makes it much harder for him. So I'm very happy because, Sam Bankman-Fried's defense this whole time was like, oh, I didn't know what I was doing. That doesn't make sense if all the people under you plead guilty.
So what do you think is going to happen?
Oh, I don't know, but I just hope he sits in jail for a very long time. Because he did so much damage to this industry.
So much, especially because Alex Mashinsky and all these other guys did as well. And I'm realizing that DCG's guy, Barry, our friend Barry, is also not a good actor. But Sam went to Congress. He was trying to buy up politicians. It was a straight up Michael Corleone style move, where he didn't just stay in his lane. He tried to influence politicians, get against them, and use mommies and daddies' contacts. I mean, just let's be real. Mark Kidd, I'm sure, used mommies and daddies' contacts. And it's all nice when mommy and daddy are law professors. And in my mind, just the whole thing disgusts me, and I don't know. I don't want to, we don't know what mom and dad knew. But this guy was all over politicians. And the fact that these guys are pushing back on crypto so hard now, especially Democrats, because he gave them all money. So he set us back. He set everyone back through price, through regulation, through people's skepticism of crypto, stealing $10 billion and losing it, putting, the fact that Caroline was some, 2 or 3 level year out of college analyst at State Street, and then, she was running Alameda all up. I mean, what the hell? Seriously. How is this? You remember, you and I, do you remember what you did 3 years out of school in these places? You were making copies and buying coffee. And, they gave you, I don't know, a few $1 million to play with, you were considered lucky.
Speak for yourself. I wasn't buying coffee. I was just making copies.
Perfect. They were like, I don't know if he's
we cannot trust him with the coffee yet. Maybe one more year we'll promote him to buy coffee.
Oh my god! Our industry, but this is it's in the long run. This is good. Serious players will come in and build it the right way, and I guess it's good at 10 billion versus 100 billion. But Sam, I hope he sits in jail for a very long time. The hubris that he had, just a pure, when I was doing listings, I dealt with Alameda. I dealt with them on the market maker side, and they were the cockiest, the most they disregard everything. They were late making our market once by an hour, and they blamed us for it. I mean, it was just the hubris on these guys was astronomical. They thought they were God's gift to whoever. And
that happens. This is I don't like Warren Buffett too much, but that quote of his is very important, which is when the tide goes out, you see who's swimming naked. And that's true. If the market would have continued, if they could continue the low interest rate policy, maybe if Putin wouldn't have invaded Ukraine, and this would have continued for a year or more, maybe by then they would have fixed their balance sheet and all of this wouldn't have come to light. So in a sense, every time there's some kind of contraction, every time there's recession, contraction, interest rate increases, it's a stress test to the system, and it's a very good stress test to the system because the honest players gain market share. I've told this story so many times, but I'm in charge of growing the second largest exchange in the world. And I was like baffled by how does FTX offer these things? They were, not stealing our customers, but customers were going to them because they were offering better terms than us. We were very conservative. And same with Gemini Earn. We were like, how can they offer rates that are better than us, So now it's very clear how that happened, and it just wasn't sustainable. So in a sense, capitalism works. When you print too much money, you get inflation. When you get inflation, you have to raise interest rates. When you raise interest rates, it takes down irresponsible actors.
So on this note of capitalism just works, let's switch gears and welcome our guest, Kristen Ragusin. She'll come up next as the guest of the show. We're going to talk about macro with her. And in fact, the interview, which was pre-recorded, was so good that we're going to make it a two-parter from this week and the next week. And then we have an incredible professor, also two-parter, because that conversation just went and went and went. So great guests coming up to you. So you okay to switch gears?
Absolutely.
Hello, everyone. And the next section of the Dollar Auction Show, we have a very, very special guest today, Kristen Raggison. Kristen is a professional wealth management consultant with over 25 years of experience. She's been investing in over $150 million, and she helps clients navigate markets and really achieve their own bespoke financial goals. She's also a certified digital currency professional, which I want to understand what that is once we fully introduce you and welcome you to the show. And she has a master's degree from Fletcher School of Law and Diplomacy at Tufts. Kristen also holds certificates in FinTech from MIT and in Money and Society from the University of Cumbria in London. So super excited to have you. Welcome to the show.
Oh, thanks so much. So great to be here with you.
Perfect. Tell me a little bit more about this digital asset certification, because I want to know more about it. Maybe I should get certified.
Yeah, it was fantastic. That was sort of in the early days when Bitcoin was just coming out, and literally they were beginning to certify people. And I was so excited. I ran into the Bitcoin paper back in 2009. Even I was on the chat boards when they were saying, hey, we need computers. Would you help us be a miner? And I was like, I don't know what it is, but sure. How do I do that? Too bad I never got that far. But it was a wonderful program where literally you would take modules and become certified and learn everything about blockchain and Bitcoin. So right out of the gate in 2009, you actually were functional and talking about the difference between Bitcoin and other cryptocurrencies and blockchain.
That's amazing. And then you have a very traditional background, especially the FinTech certification or your studies in FinTech from MIT. Tell me a little bit about that, because obviously with Gensler now in the SEC, it's a very prescient and a very near and dear topic to all of our hearts in the crypto space.
Yeah, and Bitcoin. I mean, MIT does such a great Bitcoin week, and Gary Gensler. I mean, they really, people from the Fed are there. That's another wonderful program I took. It's so interesting. I think that's a big part of my life. I'm sort of always in the two worlds at the same time. So I would tell people in traditional finance, like, wow, this thing called cryptocurrency, this thing called Bitcoin is coming. And they would just blow me off, or then you get into the traditional Bitcoin world and you get the clash. But it's so exciting where we are, because in a way we're coming back. I just was saying to a client this morning that in the 1800s and early 1900s, the people walking around were talking about money. They were talking about money mechanics. And we are on the precipice, I think, of the greatest money revolution that we have yet to see. Crypto just is the beginning, and what's coming now in the next 12, 24 months, I think, is going to blow our socks off.
So I'd love to talk about this, and maybe I know you wrote a book, The End of Scarcity. So I'd love to learn about a little bit more about your book, and look, let's plug it, of course. But I do want to take us in a direction of geopolitics, and I have a feeling that's where you're going with crypto. It's just the beginning, the tip of the iceberg, or the precipice of this new money revolution. And I think I believe in your thesis without hearing it, because we probably of a like mind. But I'd love to hear it from you. What does that mean to you when you say, this? It's a renaissance of money, really, and that's a big thing for people to understand when we think about tech. Shimon and I, my co-host, we talk a lot about tech. I know it's a long-winded question, but I just kind of got thinking as I'm asking this. A lot of these step changes in technology and other business models feel iterative to us. Maybe AI isn't a self-driving; it feels like a next order of magnitude. But I have a feeling from everyone that I've talked to outside of the crypto world that the public at large really is completely misunderstanding and underestimating the tectonic change we're about to have when we're talking about new money. So can you tell me a little bit more about that?
I think we're under the greatest societal revolution that we could ever imagine, and not like a bloody revolution, just that much change. And so if we thought the internet changed the world, if we believe blockchain is going to change the world, we have no idea how much our money as currency, money as unit of exchange is getting ready to change. So yeah. And I think the reason why we're, a lot of antenna in general are not up is that we wholly have an unconscious relationship as a society with money, with currency, and also sort of wealth. And to me, the best place to start is that wealth and money are completely separate. And so even being in wealth management my whole life, this would be like, what are you talking about? I think when we talk about cryptocurrencies, we also, again, assume that they're wealth, but they're technology, right? So Bitcoin fundamentally should be a technology. I believe it's a store of value, but money itself, when it's correctly done, is solely a technology. And that's why it is getting ready to change so much. Everything that's ever been a massive change in history, they changed the money. So when society changed, when there was a golden age, a renaissance period, technology as a money was correctly designed. You can look in the past 5,000 years and find this. When it's been misdesigned, you have heartache, you have oligarchy, you have suffering, you have the crushing of middle class, you have tyranny. And so what I really saw in 2008, I saw the crisis coming. This is what led to me going on this incredible journey, this investigation about money, writing this book. And I found that money history is the true history of all history, and we don't know it. And we have an unconscious relationship with money as technology and wealth. And when we start to get it, boy, do we get empowered. And so here we are, we're at this crossroads. And if we do money correctly, we're going to have the most glorious era that we can enter.
I like how you're talking about this. And, while you were talking, just for our viewers, I want to show a couple of quick charts. I'm going to share my screen here. And the first chart is a chart of Bitcoin to the US dollar. And I just, for those of you that are listening on the podcast, we've obviously had a peak right around, call it the first peak was around April 16th, 2021. And then, a second peak right around November 5th, 2021, double top. And now we're at 24,000. We were at 60,000 before. So call it we're 60% off of our highs, right? Not surprising to everyone. But what I do want to share next is the Bitcoin chart to the Argentinian peso. And Argentina just hit 99% inflation this year, 99%. So for our audience, I know we have fairly sophisticated audience, but just it's a little bit hard for me even to fathom that what you have loses half of its value in less than a year or in a year. And if we look at the Bitcoin chart to the peso, we're only 30, we're at probably 4.7 million Argentinian pesos to Bitcoin. And at the height of around November last year, we were at 6.4. So call it we're 30% off of our peaks versus 60. And so I think this goes to show to you that, at least to your point, that in the US, a lot of times we have a very myopic Western US and, world view. And it's a very privileged worldview, right? We are very privileged to be in a society that has a pretty good rule of law, the best economy in the world, just factually. but other countries don't, right? And we have 400 million people out of 7 billion. So the rest 6.5 billion people out there are not as privileged as us. And so if you're in Argentina and you bought Bitcoin, you're not experiencing these crazy falls that we're experiencing here because of the devaluation of your currency. And so when you talk about, hey, we're going to have this renaissance and social restructuring, right? We're not, it's not the crypto bros and the illicit activities that Elizabeth Warren talks about with Bitcoin. The rest of the world, and you're laughing because I think we all laugh in the space because it's such an absurd point. But the rest of the world that experiences high inflation, again, Nigeria, Venezuela, Argentina, Russia, India, even, right? These digital assets are safe havens. So can you expand a little bit more? I know we're talking about the end of scarcity, right? Can you talk a little bit more about inflation, how that affects people's lives? And then why do we have one worldview in the US, right? And I think it dovetails off your point to a very different worldview globally. And how do you see the plates shifting? What's next, if you will?
Yeah, it's massive. So the most powerful factor in society and that affects our lives is the currency, is the dollar. And even we can look at in the US, despite how relatively we've had a joy of ease in terms of our dollar. In 1973, a gallon of gas was 39 cents. January this year, it was $3.31. So that's almost a 9x loss in purchasing power. And people sort of, again, are numb to it because they say, okay, my income can still maintain my lifestyle, versus having these massive disruptions that, even if you take Nigeria. Now, Nigeria has really gone to Bitcoin for good reason. And even as, and we can talk about the CBDC, even in particular in Nigeria, just how they're looking for adoption with that by trying to force the cutoff of cash. Every single time there has been massive change in a society, it came through the currency. So this country, the United States, was founded upon financial freedom. We're sort of taught mythologically that it was religious freedom. I argue that's untrue. That might have been a derivative. The founding fathers came here wholly in debt. They were in debt to the British bankers because gold was by far too scarce. So we're taught, number one, I argue we have this unconscious relationship with money in the sense that we're born on the earth. There's the sun, the moon, the trees, the people around us, and money. And so we look at money as a law of nature. We don't question it, but we create money, right? And that's what the crypto revolution has taught us already, that we together create money because we believe it's better to live together. But money also can be created and architected in a multitude of ways. Are we doing it correctly? So the founding fathers, in their great wisdom, because again, they were sort of coming off the heels of 500-600 years of knowledge since the Magna Carta of 1250, created money as a currency representing productive value, or the colonial script was representative of how much productivity there was from the land. They issued it off of land banks. It was not created out of nothing. It was not a fiat currency. And it was not inflationary. It actually had everything thrive because they kept the level of currency equal to the productivity of the people. So unlike gold, which the idea is that money has to be scarce to have value, which again, I argue, big misnomer, huge point of confusion. But we think in a dualistic manner and we think, oh, that means money should be unlimited. No, money should be equal and fluctuating to the productive value of the people. If we're that much more productive, there should be more tickets of exchange. If we're less productive, there should be less. So they were able to create a system of script that represented the productive value. This became so threatening to the monarchies in Europe that it was the source of the Revolutionary War. And France and Britain brought tall ships over to the eastern seaboard of the US with printing presses to completely disrupt and create inflation through the monetary disruption. And it was so successful that during the war times and colonial times, if you were caught using a counterfeited script, you could get capital punishment and be killed, because they understood that disrupting the balance of currency was the destruction of every country. So inflation, which we've sort of been frogs in the pot, slowly, we're sort of numb to it. Now we're waking up to it in the past couple of years because we're having, quite disruptive, inflation. And it's really how societies have been controlled. The wealth of a nation is taken away, the people's ability to create their own and prosper from their own productivity when their currency is miscreated. They're really colonialized in many ways.
I like this idea that the founding fathers came because of the freedom of money. Can you expand a little bit about, you mentioned that they were tying the value, right, the notes, to the productivity of the land, almost like a call option on the local GDP of the area. Mm-hmm. Can you expand a little bit about how does that mechanically work?
Yeah. I mean, you could look at it as you could be as sophisticated to say, oh, it's a futures contract, right? Or you could say it's a gift certificate. And, you could look at farmers today in the United States or many places. In the winter, you can give them $400 or $500 and invest in them like crowdfunding ahead of time. Then in the summer, you get 10 weeks or 12 weeks or 16 weeks of food. So is that promise to deliver from a specific issuer, is that not money? And the question is, if I were given 10 or 16 tokens from the farmer, could I buy gas? Could they be accepted for other services? And this is exactly what Benjamin Franklin knew. They knew that colonial script was just a paper. It was just a futures contract. It was a promise to deliver of some productivity later, legally attachable, from due in a specific period of time. And money was always created this way when it was created correctly. And I'll tell you, for as much as, especially in the monetary reform community or sort of auditing the Fed, these kinds of things, people say gold is sound money. Gold has actually, unfortunately, been used as the arbiter to bring about these disempowering systems. Because even though it's worked during times of breakdown, and if our systems were to break down again, yes, it would work. But does it actually become the basis for a thriving society? No, it doesn't, because it's too scarce relative to the real productivity of the people. So just to draw one example of the early colonies, like if you took Pennsylvania versus Rhode Island, Pennsylvania was quite, they were conscious, they were conscientious, they issued as much script, they made sure that the money traveling in society was equal to how productive the people could be. If there was more pent-up demand that the local people could do more business with one another, they would issue more script backed by that productivity. If there was too much circulating, a short-term tax would come in to absorb it, so that the level of money in circulation was always equal to the productivity of the people. Rhode Island was irresponsible. They did not control the amount of script in circulation. And so they had inflation and they had devaluation. So you still need, the intention of government, or even the Federal Reserve, if the Federal Reserve was the government bank, which of course we know it's a private institution who has the proxy of the government to give commercial banks the right to say that our credit is creditworthy and create the money as bank credit. If they really were the government bank, they would be able to issue our money debt-free, because it's supposed to represent our productivity of the people. But they should then make sure that not too much is in circulation and not too little. This isn't going to happen again. So the solution is not there. The solution is with the people. It's with us, as it was with the early settlers of the United States.
So, well, look, we clearly have. I was actually going to take us there. I want to know what is the solution. Like, can you expand upon that? Because, like you said, it's probably highly unlikely that anyone in the world now that's in a fiat standard is going to go towards this either fractionalized or futures-based system of productivity. Plus, productivity is a little bit hard to measure now versus before, I would argue. But so, what's the solution?
Yeah, the solution actually is something like this, but on multiple levels, and it's happening. There are even, it's happening in the crypto world. We're starting to see corporations. I believe what we really will see is our corporations are going to start issuing money instead of issuing debt or stock. I mean, they may
through tokens.
Yeah, through tokens. Absolutely.
Mm-hmm.
So for an example, hypothetically speaking, I believe we'll see Apple and Amazon, Toyota begin to issue currency. And as they promise to deliver.
So I want to interrupt you for a second, because so my background is I was working at Microsoft from 2014 through 2017, and then I made a jump away. But when I was at Microsoft, I was working the strategy team, and I discovered blockchain and wrote their blockchain strategy, and Microsoft did like a fifth with it of what I recommended. But nevertheless, one of the things that I had a team do, and we presented it to Satya and the board, is I had this little map, and I was predicting where the players would go. And Amazon, for me, launching their own coin, why they haven't done it yet is just because I don't know the economics of Amazon, right? The internal economics, but you can easily say that, hey, we're going to launch Amazon coin, and all the merchants that are selling through Amazon, you save $3 on Visa fees. $3 to Amazon's bottom line, straight to the bottom line. 3%, excuse me, is massive from a free cash EBITDA perspective. And then you can say, hey, if just to incentivize you, if you use this Amazon coin, you get X% off of AWS, something that's already high margin that you can give away for free, more or less. It makes so much sense to lock people into that system more so, and have voluntary lock-in. Like, people can come and talk about monopoly or not, but you can say, hey, you can convert this to dollars, you can do whatever. This is voluntary lock-in. Why they don't do it? So it's funny that you mentioned Amazon and Apple, because it's like, of course, like Amazon, Apple potentially, but I agree with you, but potentially, but Amazon is such a slam dunk for me. Why they haven't done it yet, I just beyond me.
Right. I actually believe it's unstoppable. So not only is it going to happen on the corporate level, I think it's going to happen on the state level, on the county level. And it begins, the most important thing is that it begins in our communities with our farmers, because then you have monetary freedom, right? That is anchored in. And once you have monetary freedom, you can have any kind of money out there, and it does not matter. So you could say, I hate Bitcoin, I love Bitcoin. I hate gold, I love gold. I love the, you could say, I love the CBDC. The issue is that you're going to have choice, and therefore you're going to have capitalism will come back to investment capitalism. I say we're sort of on, surveillance capitalism. What are we on? Who knows which version we were on? Finance capitalism, where, everything had to be making money only through issuing debt. And then all the people that hate capitalism truly don't understand we don't really have it today, because there's nothing wrong with the car. So if the car is investment capitalism, which is the most productive, beautiful system, but it has to be fueled with the right gas, which means you have to use a money or a currency that is designed correctly, which means it must represent correctly the productive value of the people. So Amazon does have Amazon coin, right? So it's inside their ecosystem. Nobody really knows about it. What's the scope of it? It's just used, I think, for games or digital tokens. I mean, I have only looked into it a little, but there's already some type of strange prototype in there. And you would say, of course, you would revolutionize the bond markets. Why would these companies not go directly to their customers for a capital raise? And to your point, companies like Etsy or Uber or Airbnb, who can get a dark reputation from saying, listen, their value is only from the backs of other people. So could they not get behind all of their creators, or even YouTube or other competitors to YouTube? I could see Elon Musk doing this with Twitter. It's a pretty close jump. But to say, you know what, we're going to issue our own token. And if you do X amount of productivity, here's credit to redo your bathroom, to pay for your car insurance, so they could do an equity share. And, right. So all of this is coming years ago, even, because I have been obsessed with this now for like 15 years. and where I could just see, oh my gosh, this unbelievable money revolution is coming, where we are at the precipice where all these people before us knew how to do money correctly and we lost the wisdom, but they never had the technology of blockchain. And so we're the first civilization in 5,000 years of history that is now getting this simple wisdom back of, oh my gosh, money is actually a neutral technology like the equal sign in the equation that's here to serve us in terms of our wealth, which is all the creations and the gifts that we create for and with one another.
Yeah.
Great. Right? Money assists us in the exchange. It's a store of value. It's a receipt for goods and services distributed. The issue is it must maintain stable value, which no currency out there is doing. But when it's backed by production, it will. And there's a specific formula that it follows. So we are at this incredible gateway that I really believe our ancestors are praying that we make it through this narrow passage, because we liberate the world, because we can verify how much quantity does Toyota really have the production of cars if they're going to issue whatever amount of money or tokens? Do they have the real supply and demand? So all of this is still hypothetical, even though I know of some companies in California that are beginning to actually create tokens or currency representing a certain amount of value of what they produce. But the big thing is you only can issue as much as you have legitimate supply to be delivered in a certain period of time, limited by the real market demand for that product.
I want to expand on this because you mentioned a couple of points which, I think I agree with, but and they sound fantastic. But let's go into the mechanics, right? Because I also talk about this when I am on the show. I'm like, hey, stable coins are a great way to export U.S. values to the world. Blah blah blah. It's very poetic, but let's go deep together. So I guess I see this as maybe a couple of things. One, let me make the counter argument. I'll play a little devil's advocate with you, if you would. Okay, let's have a little debate. This is ad lib. We're doing this now live. I'm going to try to argue against you, even though I believe in what you're saying. So the argument against you would be, okay, but we have loyalty points, right? So I go to the store and I get loyalty points, and I get Starbucks points, and I get these tokens. One, how is it different? And two, why do I need the blockchain? I mean, it's like Starbucks points work great, and I accumulate so many points and I get a free, whatever sandwich or a free coffee from Starbucks. So how is it different?
Yeah, it's almost not. And I think that's what's exciting, because loyalty points are in fact actually properly created money. They're just not fungible, right? And you have to also, you still end up bartering on some level. And when I talked about this stuff back in 2007 and 8, and I said, oh my gosh, this unbelievable money revolution is coming. And people looked at me like I had four heads. This was pre-Bitcoin and blockchain. And they said, what do you mean? Are we going back to barter? And I would say we barter all the time as it is. So if I go to Starbucks and, I still remember an Americano being $2.41, which it's not anymore. And if I were to say, hey, look, I'm going to get a tall Americano, it's $2.41. Is it worth it to me to exchange however much in consulting services I need to provide, right, to do that exchange? Or if I'm going to buy a $5 or $6 drink, do I feel the entire experience? Do I feel like it's a fair trade? We are bartering. It's just been monetized in dollars. And so we should always have the choice as to whether we believe the value exchange is reasonable. Only we can make the decision. Now, there's some things, whether it's our taxes that the government services that we have to or feel that we're paying for, our utility bills, whatever. But we have still some experience where we have choice of value. Ideally, we're supposed to always have that choice. Now, loyalty points, I have said, and I really show this in the book also, that they're a preliminary version of doing money correctly, because they're not issuing money as mortgage debt. And I just want to take a little small tangent here, because this is what almost 99% of people do not know, is that we actually don't have money. The Fed really doesn't create the money that we use. The Fed creates reserves, which go on the balance sheet of the big commercial banks, right? What we use as money is bank credit So if I go to Bank of America and ask for a mortgage, they give me a plus and a minus, right, of book entry. And so when I spend that money in society, it looks like money to people, but it's really my debt. So we are only using mortgage debt as money. All money in our accounts, all the money that anybody gives us, it's just someone's debt. And this is the reason why our systems are so vulnerable, and the systems in the US are extraordinarily vulnerable, because if we don't have borrowers continuing to borrow and take out new debt, God forbid the US government were to pay back its debt, we would have a humongous depression because all of the money circulating is borrower's debt. So loyalty points, back from that tangent, loyalty points are actually being created as money without mortgage debt. And they actually represent credit. They represent Starbucks' ability to produce something that they haven't supply, even though we haven't verified it, right? That there is demand for. Now that already becomes money. If we could translate that to the point where it became fungible, or the technology was in the wallet to exchange those multitude of credits, it now, quite honestly, becomes 85% of what I'm talking about.
I want to make sure I don't abandon the question of there's a hidden value to companies from loyalty points outside of the data, but it's breakage. So basically, you give 1% back in loyalty, but only call it 0.8% gets actually redeemed for something else. So, and that's very valuable to companies. It wouldn't happen if now you have fungible loyalty points, meaning I can transfer or exchange my Starbucks loyalty for my, Whole Foods loyalty points, and so on and so forth. There's some sort of medium of exchange. Mm-hmm. I want to come back to this because the underlying question before we even get there is, I think if I can distill what you're saying down as, look, right now we're basically using credit. Right. Actually, it's an interesting thing you say mortgage-backed credit. Do you mean mortgage as real estate mortgage? That everything essentially comes off of land, right? Okay. Right. And
also college. The one point you could, like in the 70s, a home was more of a home rather than we were not enculturated to look at it as an investment. And I think this is, again, another misnomer. Mm-hmm. Even though we all feel better when our values of our homes go higher, it's actually destructive. It destroys the American dream, because now an average home is 10 times salary. And in the 70s, it was 3 times salary. A college education was almost free. Today, a college education is like a home or a small home.
Yeah.
And this is because we are creating the dollar, the currency from consumer debt. It's really consumer debt, but the vast majority is mortgage. And this is why the price has to go higher on the home. And so it pulls investment capital away from entrepreneurs, which pushes down pressure on salaries or real wages. Creating money out of debt destroys capitalism, because your college, even hospital debt, and housing debt explodes. We need it. When somebody repays the mortgage, the principal part, the money is destroyed. So if you pay off your mortgage, you are in a better position today for X period of time. But that capital, whatever the dollars were that were circulating for the loan, they're destroyed. So if somebody doesn't immediately take that amount of money out, then the whole society has less, like a snow globe. And this is why we have this unbelievable undercurrent to constantly go into debt and more debt, because we're using it as our money, which it was never intended. Money was supposed to be credit, which even in its most basic, to have it as a loyalty point. And I will give you some examples where American Express, even during the Great Recession, was creating loyalty points that were pretty fungible. It was amazing.
Yeah. Well, perfect. We're going to wrap here, but we'll continue with part 2 next time.